Here's one of the sponsors of my show for 2 years, and he's back as our economic guru. His name is Kip Herriage, and he's the CEO of Vertical Research Advisory, otherwise known as VRAinsider.com. He's the smartest economic guy I know, and so I wanted him to come on and talk about A, the economy, and B, Trump's infrastructure plan. It's been leaked, and the news is really good for the economy. Hey, Kip, welcome back.
Hey, Wayne. Good to be here, my friend. How are you?
I'm doing great. How's the VRA doing?
Well, I was prepared for that question. I'll give you a straight-up answer here. To start the year, this may not even sound possible, but everyone knows the market's off to a great start this year. But in the first 14 trading days of this year, the VRA the portfolio is up, has 173% in net gains, a 14.4% average per stock. It doesn't even include today. We killed it again today as well. And 11 of our 12 positions are up, and that works out to an annualized return of close to 200%. So that's how we're doing.
Unbelievable. Fantastic. And I knew, by the way, when I asked those questions, I obviously know the answer because I read your VRA every morning. So I knew how you're doing, so I asked a loaded question. But what I didn't know, because I was busy giving a speech today, a big Republican speech, is how did the market do today and how did gold do today? I've not had a chance to see either one of those.
Today was interesting. The Dow was flat today, but the NASDAQ was up huge, up 52 points.
Wow.
Big moves today aren't the same as they used to be. The Dow's at 26,000 now. If you go up 1%, that's 260 points. That sounds like a lot, but Wayne, you remember the heyday, and everybody's talking about this being a big bubble, and that it's too late to get in because once you buy, it's going to crash. And people are just clueless about this. I mean, absolutely clueless. And I hear from them all day long, from my Twitter feed, through email, through my site. And they're like, how can you be telling people that now's the time to get in after this move we had? Don't you understand? We're about to have another .com kind of crash. And what they're missing, and they're really missing this, is that valuations are nowhere near what they were in the .com days. We had some of the largest companies at the time trading at somewhere trading at 50 to 100 times, not earnings, revenue. And so everything has changed now. Some of the big guys like the Amazons and Netflixes are trading in single digits times revenue, or 4 to 5 time revenue. So, on top of that, we're seeing a global reflation take place. These are almost once in a lifetime kind of events. And, I was extremely bullish, as you were. You were the first person that I knew in the media that said that Trump would win. I studied what you said. It took me a couple of months to come around, but in late 2015, I joined you and said Trump would win, and then we've both been extremely bullish since then. But I think people have no idea how high this is going to go. We're going to, just based on math, we're going to 40,000 by the end of Trump's first term.
You're talking about the Dow now, which is 26,000. So it's got another 14,000 to go. You're talking about almost doubling. I mean, double would be in the 50,000 range. You're talking about close to doubling, and that's in Trump's first term, not if he gets reelected for a second term. You are really bullish. My gosh. Wow.
Well, the reason, besides it really is simple math and earnings and having a president that understands the economy, all these things, but also underlying it is sentiment. And, investor sentiment plays a major role in what happens in the stock market. And the bottom line is that the public is simply not bullish. They may say they are, but the facts don't back it up. We were just coming off last year. Retail, the public in the market investment was at a 19-year low. We're just coming off of that. And so the analogy I give everybody is when you get into your taxi or you get into your Uber and your Uber driver is telling you the hot stock of the day, that's when you'll know things are getting frothy. Today, your Uber driver is more likely to tell you about his favorite cryptocurrency.
I was going to say Bitcoin. Stock. That's exactly what I was going to say. Your Uber driver will tell you about Bitcoin. Exactly. So is your feeling that Bitcoin is a bubble about to pop?
Based on no, I own 3 different cryptocurrencies. I think they still have room to run, but that's just a very small percentage of my portfolio. No, I'm not calling a top in cryptocurrencies at all. I just think the stock market is undervalued, and we're nowhere near the point where people should be concerned about some kind of a big sell-off.
You know what's funny, and we're talking to Kip Herriage of VRAinsider.com. He's my economic expert on the show, or economic guru, as I call him. And he's been right on the money. His numbers predicting where stocks would go, individual stocks and exchange-traded funds, and the economy have just been uncanny for a long time. I followed him for 15 years, but just the 2 years I've done my radio show, we've had him on again and again, and his numbers are amazing. You can follow him at VRAinsider.com. But here's the thing, Kip. If Trump does not push through in December that massive tax cut for corporations, you'd be looking at a whole different world, a whole different stock market, a whole different economy. I'm shocked to see the liberals, like gay liberal Tim Cook, the CEO of Apple, say that this is the greatest thing for the economy and give out giant bonuses to everyone and say he's bringing back hundreds of billions of dollars and investing hundreds of billions in the American economy. I'm shocked today to see that the IMF, you know they hate Trump, but the IMF said the entire world global economy is now in great shape, and a large portion of it is due to the Trump tax cuts in America for the whole world. I mean, the things I'm hearing now are just unreal, what Trump has done for the entire world's economy with a ways to go.
It is amazing all that's happened inside of 1 year. You know, how about J.P. Morgan? J.P. Morgan is not exactly a company that comes to mind when you think about a patriotic company. I mean, they took $50 billion from taxpayers after the financial crisis, right? And
did they ever owe it back, by the way? Did they ever have to give that back?
They paid it back with interest. They did do that. Pretty much everybody did. But they just announced today that with their tax windfall, they're going to make $20 billion fresh investments in the U.S. They're going to have $4 billion in small business loans, $5 billion spread throughout low-income communities. I don't know what that means, but we'll see how that works out. 400 new branches, 4,000 new employees, and they're going to give $1.7 billion to philanthropy. All because, and this is happening company after company after company. So, folks, again, anything could happen. You never want to get too crazy. You don't want to get a margin account. You don't want to borrow money on your credit cards to invest in the stock market, that kind of thing. But if you're not fully invested, sit down, forget about all the naysayers. Take a look at what's really happening on the ground just in your area. Talk to people, talk to business owners in your area. You know, we went long retail stocks. It's something I have not touched in a decade. I just based on fundamentals, went long in the retail stocks in the third quarter of last year, and we're up 40% in retail stocks. I mean, when has that ever happened before? I don't think in my lifetime. So
although,
everything is coming back.
Listen, you know I despise Obama, and I think he's the worst president in history, and I think he's a commie, and I think he tried to destroy America. I think he was sent here to destroy American business. But let's give credit. Obama did have a good stock market. That's the one thing he had, was 8 years of a very good stock market. So, I mean, the market has done well under both Obama and Trump. Not well, fantastic under Obama, and incredible fantastic, double fantastic under Trump. It's the one thing Obama did well. But tell me if I'm wrong here, Kip. I'm about to write this commentary for the Las Vegas newspaper, because the single biggest argument I get from liberals who send me letters in response to my columns is they say Obama did great for the stock market, so he was not a communist. And I want to say to them, Trump's stock market is going up for only one reason. The economy's doing great, and taxes are cut, and everybody's happy. That's the reason markets are supposed to go up. Obama's market went up for 8 years based on fraud, based on keeping interest rates artificially at zero, which is so wrong, and based on just dropping quantitative easing, just fake money printing, dropped on Wall Street for 8 years, putting us $10 trillion more in debt that all has to be paid back. So Obama committed fraud to make the stock market artificially go up, and Trump has made it naturally go up the way it's supposed to. Am I wrong?
You're exactly right, and this is the most important issue. You just nailed the most important issue when it comes to the psychology of investors. During Obama's period, yes, the market went up, but it was all based on funny money, quantitative easing, $4 trillion in quantitative easing.
And zero interest rates for 8 years.
and so the public knew it. We all knew that's wrong. That shouldn't be happening. There's something wrong with this picture. Only the wealthy are profiting from this. So we all knew that. But see, that's the dichotomy now. This is why it's taken investors time, and it's a process of becoming bullish again on the future of the United States for the actual reasons that an economy should flourish, and it's happening right now.
I remember, and we'll come back. We'll stay with us, Kip, because we'll come back for to finish up the interview in the next segment. But think about this one as we're away at the break. Every time we got bad economic news, the stock market went up higher under Obama, and they started to crave bad news because the worse the news was, the more money they'd have to print, and they knew the market would go up more. It was the funniest thing I've ever seen, all based on fraud. We'll be right back. Wayne Allyn Root, War Now. We've got Kip Herriage, our economic guru, on. You could find him at VRAinsider.com. And Trump's infrastructure plan has been leaked, Kip. And the reason I asked you to be on the show this morning is because I saw your morning report this morning, your VRA Insider newsletter this morning, and you talked about this infrastructure plan is not $1 trillion. It's $3 trillion. Tell us about it. It's
at least $3 trillion over 4 years, and it'll probably be larger than that. If he goes for 2 terms, who knows how big it might grow to be. But as I read, as you said, the leaked, the draft report was leaked. I read it yesterday, and as I read it, my mouth was open because the most interesting thing about this is the creativity of the funding mechanisms they're putting in place and the way this is going to be funded, mostly not with taxpayer money. Instead, with some very creative funding mechanisms that allow states and municipalities to raise funds in the private sector and then to also match that with government grants, assuming certain protocols are met and certain but basically it's got a multiplier effect built into it without getting into the weeds, where $1 trillion very quickly can become $3 trillion. And I think it's very similar, Wayne, to the tax bill, where, yeah, great, we're all getting a tax cut. Yeah, that's great. But, oh, by the way, $4 trillion is going to come back repatriated into the U.S. So the multiplier effect, and then we see all the benefits, of course, that these large companies are paying to employees, et cetera, share buybacks, all that. We'll see the same multiplier effect, I believe, with the infrastructure program. It was an eye-opener when I read through that.
Right, and that's why when you talk about the stock market has a long way to run, that's what's going to make the economy fly. We haven't even factored in an extra $3-4 trillion in infrastructure spending. I mean, this is going to make all the development and construction companies in America rich, and they're all going to hire people, and those people are going to spend, and it's just going to be an economic orgy of epic proportions. This is unbelievable.
A year ago, when I was on the show with you, we talked exactly about this, and we talked about buying Caterpillar and buying John Deere.
Yes.
Those stocks have doubled. So but they're coming off a long basis, and one of the things I think that investors, probably because they've just never heard it before, it's a new concept, they just don't know about it. It's called range expansion. I've been talking a lot about this to my clients, and bottom line is this: when a market or a stock, be it a global market, U.S. market, doesn't matter, when they hit all-time highs, that's not the sign of a new top. That's the sign of a new floor. That's range expansion. And so now we're seeing global market after global market, not just in the U.S., but all over the world, hit all-time highs. We're seeing housing index, all-time high, financials, all-time high. You go right down the list. They're all getting one new high after new high, all-time after all-time high. This marks range expansion. This marks the birth of a new bull market, not the end of the current one. So, it's just a different concept for people to think about. But I don't even watch CNBC or Bloomberg anymore because they just really don't know what they're talking about. They've got people concerned. They've got people bearish. And, again, I think it's just we have to start having confidence again in the fact that America is leading the world. We're doing it economically. We're doing it as capitalists. And we're doing it as nationalists. And so these are new concepts coming off of 8 years of a socialist in office that told us the government was great, and then through only government could you succeed and prosper. It's never been the case, and Trump has certainly proven that now.
And don't forget, you're listening to Kip Herriage of VRAinsider.com, my economic expert on this show for 2 years. Kip's the one who predicted 25,000 Dow in 2017. Now it's at 26,000. If people thought he was nuts when he said 25,000. So last bit, we got about 30 seconds left, Kip. Gold. I mean, obviously, if Trump's spending, giving tax cuts, cutting no spending of any kind, and adding in $4 trillion in infrastructure spending, obviously, you're going to have inflation, you're going to have more debt. That is a reason to own gold, correct?
It's always been the reason to own gold. Gold is up big today. The key marker for all your listeners is watch gold. If it breaks through $1,370, $1,370 an ounce, it's going to the moon. Once it breaks there, we're only about $30 an ounce away.
All right, Kip Herriage, VRAinsider.com. Thank you for coming on the show. Always love your insights, Kip.
Thank you,
Be
Wayne.
good, man. Be good. God bless. Good luck. More great success in 2018. The guy's a winner. Kip Herriage. All right, Wayne Allyn Root, War Now, USA Radio. Heading back after the news. We'll be right back with you.